Bitcoin is the digital version of gold, and it has all the aspects of gold, meaning it's a scarce asset. The new flow of newly created Bitcoin every year is low relative to its existing stock. Yeah, so a couple things. So one, Morgan Creek Digital, we formed just about 3 years ago, and it's an extension of Morgan Creek Capital. Morgan Creek Capital is a registered investment advisor. We do traditional investing and alternative investments, big focus on innovation. And so Morgan Creek Digital focuses on the digital world and innovation in the digital world. So we have a venture capital fund, Fund 1, and now we're raising Fund 2 to invest in the infrastructure around blockchain technology. Exchanges, tools, security, anything that will increase the usage of blockchain technology, Bitcoin, and other cryptocurrencies. So that's venture capital investing. We also have a digital asset index fund, which owns the 10 largest digital assets, excluding the closely held versions, kind of like the S&P 500. They exclude the closely held companies like Tesla. And so we run that as a solution for institutions to own the cryptocurrency directly. And then we do some other things around the space, but primarily venture capital, early stage investing in infrastructure, and then an index fund for crypto itself. Bitcoin gold equivalency. And normally in the old days, I used to wear a tie for these types of things. And so I'd have my Bitcoin gold equivalence tie. So it was a little scale. One side was Bitcoin, the other side was gold. And from my friends at Van Eck, who are great proponents of this space. In fact, you should have Gabor on the show here. So the idea is that if, or I should say when, Bitcoin reaches gold equivalence. And why do I say when? Well, if you think about currency, right? We have all these paper currencies. Most paper currencies eventually disappear. Governments overspend and you get a big deficit, currency gets devalued. 3/4 of the paper currencies in the history of the world have disappeared. So, the oldest one, the pound sterling, has been around for 380 years. And back 380 years ago, 1 pound note got you a pound of sterling silver, hence the name. Today, it takes 174 pounds of sterling silver to get a pound note. That's how devalued that currency is. A dollar from 1776 to 1913 was worth $1. Since 1913, it's now worth a nickel. So we turned a paper currency into a coin. So Bitcoin, on the other hand, like gold, is a permanent currency. It's a scarce asset. If you think about gold, for 5,000 years, it's a long time, 1 ounce buys a fine man's suit. Pretty good store of value. Whether you're back, in Cleopatra's time, turn of the century, or today, take an ounce of gold, go to Savile Row, you get a fine man's suit. So Bitcoin is the digital version of gold, and it has all the aspects of gold, meaning it's a scarce asset. The new flow of newly created Bitcoin every year is low relative to its existing stock. And that stock to flow model says that scarce assets rise in value. They hold their value relative to fiat currencies, which can be printed at will. So over time, we believe that, today, the largest currency in the world is gold. It's about 2.4 trillion of the 8.4 trillion of gold value is currency. The rest is jewelry and industrial metals. Then you've got, the dollar, the next biggest at 1.7 trillion, then the renminbi, et cetera. Ultimately, we think Bitcoin gets equivalency to gold. So that's the $400,000 to $500,000 if it had that gold equivalency. Now, the $100,000 comes from the parabolic model of Metcalfe's law. Networks grow according to this Metcalfe's law. If you plot that parabolic growth curve, it said it should be about $10,000 in 2017, exactly what it hit. It says it should be about $100,000 in 2021. Probably where it's going to hit, and then increase. Fantastic question, and something I think people need to really think about. Look, we have the highest wealth and income inequality in the history of our country. And it's worse than the Great Depression, worse than, during the Revolution. It's horrible. And the reason is because of this unfettered printing of currency. Since we went off the gold standard in 1971, the wealth gap has just soared. And that's because the top 10%, and really the top 1%, and really the top 1/10 of 1%, own all the assets. And so if you think about it, if I own an asset and it's denominated in dollars, if I devalue the currency, the value of that asset has to rise, right? The price of that asset has to go up in nominal terms. Think about, the price you paid for gas growing up. I mean, you're still young. So when I was growing up, the price of a gallon of gas was 33 cents. Today, it's over $2. It's the same gallon of gas. It does the same thing. It's just less valuable or more expensive because the currency has been devalued. What Bitcoin does is Bitcoin, because it has a fixed supply, it stops that. Same way with gold. Gold has a relatively fixed supply, meaning the new supply each year is basically offset by the amount that's lost or stolen or melted down. And so the supply of gold relative to the value of assets stays consistent, which is why it's a store of value. Bitcoin, same thing. Because we have this discipline of knowing we'll only ever have 21 million, we'll actually probably have closer to 16 or 17 million because some have gotten lost or disappeared through loss of hard drives or whatever. Ultimately, the hard money currency, right? The currency that can't be devalued by a central bank will preserve value and allow people to opt out of the system. Think about Venezuela, perfect example. So Venezuelans, right? They've seen their bolivar collapse in value, right? So they used to have money in the bank. That money's now worthless. Had they turned that fiat currency, those bolivars into Bitcoin, then the dictator couldn't have depreciated away their value and stolen all the money at the top. And this is the nature of history. History is replete with examples where people get to the top, they get all their friends to have all the assets, and they devalue the currency. Dictator playbook. Zimbabwe, Venezuela, Weimar Germany, all these places, same thing happens. It's actually happening in the United States as we speak. Slower motion, but the same plan. Get the assets at the top. The average person doesn't own one share of stock. 49% of people in this country don't own a share of stock. They live on fixed income, right? Government assistance or fixed income investments. And every day that inflation goes up, they lose wealth. It's a wealth tax to the rich. Okay, as I said, it's opt-out insurance. So it allows you to protect your assets from those authoritarian regimes. It allows you to have assets that are unseizable, unconfiscatable, off the grid, and that store value in real terms, meaning against whatever currency that the governments decide to devalue. So it can be preserving capital against the renminbi, it can preserve capital against the dollar, it can preserve capital against the peso or the bolivar. It doesn't really matter because it's a universal, global, borderless currency. Great question. No, actually. I actually think it's designed to do the opposite, right? It's designed to be deflationary, right? It's designed to protect against the inflating away of the value of the asset. Because no one, right? The Federal Reserve, a bunch of white guys with PhDs, get together and say, actually old white guys with PhDs, get together and say, we're going to do this to interest rates. We don't know what they're going to do. We have no transparency. We have no idea if they're being corrupted or bribed or they're doing the will or the bidding of the government. We know the math of Bitcoin. We know every day for the next 140 years how many new supply will be created. We know exactly how many there are. We know exactly who owns them. There's been no fraud. Think about this. The Bitcoin network's been up for 11 years. It's had hundreds of millions of transactions. Not one fraudulent transaction. Not one. How many times do you have to get a new Visa or MasterCard number because of fraud? Okay, lots. There's been no fraud. It's the most secure computing network on the planet. And that's because when you're designing something in computing, you have to choose speed or security. Bitcoin chose security. It is the most secure network on the planet, but it's not very fast. And so what's going to happen over time for it to get wider adoption is second layer protocols. Think about Visa, right? Visa doesn't take my money, right? If I buy something with my Visa card, they don't get the money. They have to wait 30 days. They batch the transactions. I send my, wire transfer or whatever to Visa, and then they give it to the bank, to the merchants. So there's a float going on. Same thing's going to happen in Bitcoin. Ultimately, there'll be second layer like Zap, actually a good Chicago company. Jack Mahlers, you should have Jack on the show for sure. unbelievable young guy, kind of Mark Andreessen-esque inventor. Again, portfolio company of ours. Love that guy. I'm not sure I can do the second part, but the first part's easy. So the bull case is fixed supply, means that as demand increases, price will rise. Okay, that's the easiest bull case. Second is that in a world where fiat currencies will be devalued, because that's the only choice, right? In a world where governments, corrupt governments, will overspend, right, to buy votes. That's what they do. It's like all these payments to people for COVID. They're just buying votes or trying to buy votes. I don't think it'll actually work, but they're trying to buy votes. And so in a world like that, you will have a devaluation of currencies and there's no stopping it. It's happened over history. So to protect yourself from that, that's a bullish argument for a decentralized opt-out currency like Bitcoin. And the third is if we think about the digital world, where everything is connected and micropayments occur, you can't have a fiat currency that settles in T+3, right? We need instantaneous settlement, and that's what digital currencies and blockchain technology are all about. So those are the three bull arguments. On the bear side, look, no, but you know, I can come up with some, right? One is there is still a non-zero, although I'll say it's infinitely close to zero probability that some new technology comes along and displaces Bitcoin. Now, the reason I don't believe that is because of a paper I read when I was up in Chicago at business school in 1987. I read this paper by Paul Romer called The Law of Increasing Returns. He actually won the Nobel Prize 2 years ago, which I've been saying for 35 years, and he finally did, thankfully. And so the key is that it's not the best technology that wins, it's the technology that gets the greatest installed user base first. Think VHS versus Betamax. And so Bitcoin won that. And the Lindy effect says the longer it survives, the longer it will survive. So I do think, but there's still non-zero probability that something could come along. Now that's reduced by the fact that we live in an open source world, so any new innovation can just be copy pasted onto the open source network of Bitcoin. Second argument why is it's possible, again, possible, I don't think it's highly likely, but it's possible that the whole thing was set up by some central intelligence agency to confiscate our wealth, right? If you actually translate Satoshi Nakamoto from Japanese, it comes out to Intelligence Central, right? Nakamoto is the surname from the central region of Japan. And so it's possible, right, that the NSA, CIA, somebody set this up with a backdoor because they knew that the currency was going to crash. They knew the dollar was eventually going to crash. So people converted currency from fiat into this digital asset, and they had a backdoor they could steal it all. Again, I don't believe that, but there are some people who believe that. The third is that people say, oh, it's a Ponzi. And if they say it's a Ponzi, they really don't understand what a Ponzi is, right? A Ponzi is you give me money, and then I give, and your brother invests with me too, and I pay him with your money. And then I have to go get a third investor so I pay you with his money, then I go get a third investor to pay him, and that's a Ponzi scheme. What is possible, again, I don't think it's real, but what is possible is a bunch of really smart programmers dreamed up this idea to pull capital in that then they would sell this useless Beanie Baby trinket to, and then they exit stage left with all the fiat currency and laugh all the way to the bank. Again, don't think that's the case, but that is a bear case that people make. I think one nice thing about this is networks are very easy to value, and the network value of Bitcoin has followed this parabolic growth curve really since its inception back in 2009. So today that parabolic curve would place it somewhere in the mid to high teens, probably on its way towards 20,000 fair value by the end of this year. And then it accelerates in 2021 up to that $100,000 fair value by the end of 2021. And the problem is that the price doesn't always reflect fair value. It's like a metronome. It spends very little time in the exact center. It's either on one side or the other. And so the same thing's true of Bitcoin price. The price is just what two people like you and I would agree to exchange some small amount. The value has nothing to do with the price. That's what's people have conflated value and price today with this whole day trading thing, and people are, trading Hertz stock. Hertz stock has no value, right? The company's bankrupt, the equity is going to get wiped out, but people are trying to day trade it, to scalp a bunch of money. And good luck to them. I mean, I wish them well, but people conflate value and price all the time. The price is just what the last two people exchanged an asset for. The value is the number of users, the increase in cash flows, how much hash power there is in the network. All these fundamental indicators are all positive, and they all point to a value somewhere in the mid-teens.